Hello, everyone. Today it is our great pleasure to welcome David Schulhoff, founder and CEO of the MUSQ ETF, trading on the New York Stock Exchange American under the ticker MUSQ. David, welcome.
Great to be here with you.
David, you have shared with the RedChip team here your deep background in the music and entertainment industry. What inspired you to create the MUSQ Global Music Industry ETF, and how does it leverage your extensive experience in the sector?
Well, I've been in the industry, Craig, for over 25 years. I've owned a lot of publishing companies, everything from Bill Monroe to Death Row. I've owned several publishing companies, record companies, worked in live music and ticketing companies. 2 years ago, I realized after working in the industry for 25 years that there really wasn't a convenient, portable, and diversified way for investors to get total global exposure to the music industry. So I wanted to create something that gave investors access to streaming, to content and distribution, to live music, to technology, to AI, to blockchain. And so this is a really simple, easy way to get exposure globally to the whole music industry.
What's more, David, the global music industry is growing significantly over the next few years, as is expected. Could you elaborate on the key drivers of this expected growth and how the MUSQ ETF is designed to capitalize on the trends?
Absolutely. So the music industry is entering into a golden age. If you read the Goldman Sachs Music in the Air report, the industry is a $100 billion business today, which is growing and is expected to reach 180 billion by 2030. Live music is growing at 25% a year. Streaming is growing at 10 to 15%. Content is growing at 10 to 12%. All these companies are really capturing all this growth and innovation in music. Spotify is now raising rates by 10% every quarter, and they're crushing it. And 70% of those revenues are being passed down to all the record companies and publishing companies, which is why you see them growing at 10 to 15%. And then you look at live music like the Eras Tour and the Renaissance Tour from Beyonce, and you look at companies like Sphere, which are building massive experiential venues to experience live music. And live music is on steroids. So music is really entering into a golden age right now. It's about the digitization of music. It's about streaming. And it's growing, by the way. Streaming is growing as high as 25 to 40% in the emerging markets. So we believe music is very undervalued, very undermonetized, and is really entering into a golden age right now.
I want to talk about the composition of the MUSQ ETF. David, what criteria do you use to determine eligibility?
So the MUSQ ETF looks at music companies around the world, and all those companies that generate more than 50% of their revenues from music are eligible, or if they're a top 5 player in streaming or content or live music events and ticketing. No company can be smaller than $100 million in market cap and has to have average daily trading liquidity of $500,000 a day. All these companies are market cap weighted, and that gives you a great, beautiful selection of small cap, mid cap, and large cap companies.
Now, how do you determine the weighting of the various music industry segments within the ETF?
So all these companies are market cap weighted. Approximately 35% of the holdings are streaming. Approximately 35% of the holdings are all content distribution and publishing. About 10% are live music events and ticketing. 10% are all companies in technology using AI and blockchain. And then the balance are companies in radio and satellite. Approximately 50% of the holdings are US, and about 50% of the holdings are international in countries like Taiwan, in China, in South Korea, in Germany, in France. So this is a totally global fund. There are approximately 40 holdings in the fund. The fund gets rebalanced quarterly. Some new companies become eligible and they come into the fund. Other companies become ineligible and they exit the fund. But it gets rebalanced on the third Thursday of every quarter.
Now, David, in summary, give us the essential value proposition. Why should an investor be interested in the MUSQ Global Music Industry ETF?
Music today, Craig, is undervalued. Music is underhyped. Music is undermonetized. If you listen to JP Morgan's called music the best content story in the history of the business. Music's cheap. compared to what you pay for HBO Go, for Disney, for Hulu. You're paying $12 a month for access to 200 million songs. You're paying more than double that to have a small selection of movies and TV shows. And then you have to have a few of those services. So all these streaming companies are in the process of raising rates. They're raising rates almost every quarter now. They should be Companies like Spotify should be charging double from what they're charging now, which is why they continue to crush it, which is why they're up 80% for the year and 150% for the last 12 months. And all that revenue is being passed down to the content companies. And then you just look at live music and you see that people just want to go out and see live shows. Revenues are up 10 times from COVID. There's no stopping people to go see live music. And so, for all these reasons, we think that music represents an extremely compelling investment opportunity.
David, you sure have convinced me. Thank you for telling us your great story.
Thank you.